Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a senior manager and education coach here at Schwab, and this is Getting Started with Technical Analysis. And today we're going to have fun. We're going to be unboxing a brand new indicator just added to Thinkorswim charts. It's a bit of a mouthful, the Stochastic Distance Oscillator. Should be a great discussion. It's used by some traders to look for short-term highs and lows as they're planning and placing a stock trade. We're going to be combining it with another indicator. Should be a great discussion. Before we can get to that, though, let me first of all say hello to everybody out there in YouTube land, in the live audience. Great to see Robert and Josh, Will, Kevin, Tony P, Paul, Speak Truth, and everybody else. Thanks for joining us week after week. We really do always appreciate your attendance and your contributions to these discussions. If you are here for the very first time, though, if you're watching on the archive for the first time, I want to welcome you as well. And if you are watching the archives, if you're just checking out the recording of these webcasts after the fact, enjoy the presentation, but be aware that you're invited to join us in a live show. This webcast is a Tuesday webcast series. You can join it at 2 Eastern. That's when we kick things off live. We'd love to have you here. Also want to let everybody know that we have Barb Armstrong joining me in the live stream chat audience. She's going to be answering any questions that I can't get to just during the natural flow of the presentation. Thanks for being there, Barb. And Barb and I would like to issue an invitation to you. If you're not following us on X, please do that. It's a great resource. You can find Barb there at Barb Armstrong CS. You can find me on X at Cameron May CS. And it really is the best place to connect with your favorite presenters in between the live streams. But let's get right to this. Now, the first thing that we always need to consider, of course, is the risk associated with investing or trading. So these disclosures are important. Bear them in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or personalized investment advice. Investing involves risks, including loss of principal. Schwab does not recommend the use of technical analysis as a sole means of investment research, and any investment decision you make in your self-directed account is solely your responsibility. Okay, so let's dive in here. We're going to be discussing this new indicator. It's called the Stochastic Distance Oscillator. As I throw that name out there, have any of you encountered this tool yet? It was just released November 23rd with that release to the Thinkorswim desktop platform. Go ahead and chat in. Let me know if you've at least stumbled across it. Now, this is also an indicator that hasn't been broadly available anywhere for very long. It was introduced by a gentleman named Vitaly Apparini. That was introduced in June of 2023. But let's go right to the Thinkorswim platform. I'm going to keep an eye on the chats and see if anybody has stumbled across this one yet. But yeah, it is just to introduce you to it as we add it here to our charts, it's commonly seen as a short-term momentum oscillator. Its intended purpose is to try to help the trader identify short-term highs and lows as they're trying to refine their entries and exits. Will says, no, sir. Greg, no. Josh, nope. I'd be surprised. Maybe there's one of you out there who's found this already. So let's go get acquainted. I'm going to go to the Edit Studies icon, and we're just going to type in the familiar word, stochastic. Now, we've gone into stochastic oscillators in pretty good detail in previous webcasts. If you want to see those, you can always just go to our YouTube channel and do a search for stochastic, and you'll see some that I've done. You'll see some webcasts that others have done, but I'm going to choose the Stochastic Distance and then the abbreviation here, OSC oscillator, and we're going to add that to our chart and then click Apply. Now, as I click Apply, what you're going to see is that we have three lines. There are two horizontal lines, and then there's an oscillating line. If you get something that doesn't look like that as you're applying this at home, if you're following along, you might have accidentally selected one of the other, and there are many other stochastic oscillators, so make sure that we have selected the new Stochastic Distance Oscillator. Now, before I click OK and make my pop-up window disappear, I do want to talk about sort of the inner workings of the indicator, and I had to make an executive decision before I launched this webcast. Sometimes I'll go into the precise calculations. I'll write out the algorithms that generate an indicator on a chart, and we'll talk through the math of it, and we'll even, run through some examples so that we know exactly where the numbers are coming from. And then we get into how the indicator might be interpreted. I'll have to tell you, that would be way too much heavy lifting for this discussion. This is getting started with technical analysis. Some indicators are comparatively less complicated. Some indicators certainly comparatively more complicated. I would definitely position this more in that former category. This is kind of a complicated indicator. So I do want to talk about it, not the specific algorithm. You can Google that if you want to know. Okay. But what's really the intended purpose of it? So let's talk about the numbers that go into building it just at a high level. All right. So you'll see here, stochastic distance oscillator, then these numbers in parentheses, 12, 200, 6, 40, and minus 40, and then exponential. That's not a number, but it's included. All right. So let's focus here on the number 12 first. Now, another place that we can find these, if we click OK, is if we were to just go up to our Edit Studies icon, and we go over to the right and click on the little gear icon that allows us to customize the study. But I'm going to use this display because it kind of shows us a little bit more detail here. We have, first of all, the number 12 described here as the momentum length. But here's what the distance oscillator is attempting to do. Well, the word distance here comes into play immediately. First thing conceptually it's doing is it's looking at the current price of a stock. Just think if you're sitting at home, if the trader is sitting at home trying to identify highs and lows on a chart, well, it might be interesting to see how far has this stock traveled, what distance has it traveled over a recent period of time. That's really what this is doing. It's looking back over the last 12 days on a daily chart and checking the distance traveled either up or down. So we call that the length of momentum, that short-term period, 12 days. Now, for a trader who, let's say we're trying to time our entries on a stock purchase, what do you think? If a stock has been going way up, if it's a great distance above where it was 12 days ago, does that sound like an optimized time to get in? Maybe, if the stock can carry that momentum forward. But for some, they might see that as a potential overbought scenario. Maybe in the short term, the stock has already run up too high. On the other hand, if the stock has traveled a great distance downward over the last 12 days, hey, maybe this is presenting a short-term value opportunity, possibly buying in at lows as long as it doesn't continue to fall lower. So that tells us what the 12 is conceptually all about. So what about the 200? Well, the 200 here is intended to provide context. What this does is we look over the last 200 days. 200 days, what's the significance of that? Well, they're about 200 days in a trading year, about 200 trading days. So we look over the last 200 days, and we look at each 12-day period over the last 200 days and see, well, what distance is typically traveled up or down in a typical 12-day period. So then we can do a comparison. Well, what if our last 12 days, maybe we've traveled a great distance up and it's traveled the furthest it's done for any 12-day period in the last 200 days or last year. That could signal that we've reached possibly a short-term extreme to the upside, or reverse that, maybe a short-term extreme to the downside. But that's really what we're trying to do here, is look at distances recently traveled, momentum, in other words, and is it taking us to near-term lows and highs, and how extreme are those near-term lows and highs? Now, these other numbers, these two have to do with the horizontal lines on our chart. So I'll explain those in just a moment. But the 6 is really just it's a smoothing effect. For those of you who are familiar with moving averages, this does take an exponential moving average of the distances traveled and smooths out how far we've traveled recently and how that looks over time. And then finally, we have the plus 40 and the minus 40. Let's go right to the chart and I can show those to you. So let me click OK, click Apply. Now, I know for some of you, what I just said over the last 5 minutes is kind of go, woof, boy, that was a lot. The camera just stated very quickly, it's an attempt to visualize, might not have been entirely successful, might not have been entirely successful. That's okay. What you can do if you want to go revisit the logic of what I discussed, if the inner workings of this indicator are really important to you, go back and watch the archive of this session. Listen to some of it, hit pause, digest it, start playing again, hit pause again, digest that. And I think it'll bring you along pretty nicely with the understanding of the inner workings of the indicator. But with all that to the side, all of that's how it's built. let's talk about its visual construction and then its interpretation for building, for planning and placing a stock trade in the short term. All right, so we do have these, we have three lines. We have the red line that oscillates up and down. That is our stochastic distance oscillator, sometimes just called SDO. Then we have two horizontal lines. One is positioned at positive 40. One is negative 40 or minus 40. So what a trader commonly does here is they're looking at this distance that the stock has traveled, placed within the context of the last 200 days, and they're looking for extremes. And just like with the standard stochastic indicator oscillator, sometimes we have what are called overbought ranges. In this case, when the red line gets up above 40, the trader might see that as being, wow, we've traveled some distance up from where we were 12 days ago, and it's even a strong distance compared to normal over the last 200 days. In any case, if we're above 40, that's commonly interpreted as being an overbought condition, and it may signal that a stock is approaching near-term highs. So for example here, you can see right back here, we're in that overbought condition, and coincidentally, and this is not always going to be the case, but that did a pretty fair job of identifying where near-term highs turned out to be. But basically, it's just saying our momentum has carried us up and placed us at a comparatively pretty darn high level within the context of how far Procter & Gamble has typically moved to short-term highs in a 12-day period over the last year. Is that a bit of a mouthful? Yep. Can we just say there's overbought? Yeah, we could also say that too. Looks like we have another recent one right around here as the oscillator reached peaks right here. So these are overbought conditions. Well, to the opposite extent, if the oscillator falls down to a lower range, to or below 40, and look at, we have just a few examples, and this is pretty typical. This is not an indicator that generates a lot of overbought and oversold conditions normally. In a typical year, depending on the strength of a trend, it might be one signal, might be one overbought scenario. It might be 3 or 4, possibly 5 if we start to go sideways. And yeah, sometimes it doesn't work perfectly. Other times, well, you're talking about the overbought, right? Right back here. Yep. Sometimes we can get up in that overbought, and just like with so many oscillating indicators in a persistent upward trend, the stock can actually just continue going higher despite that oscillator saying, it seems like we're pretty high right now. Boy, feeling the air's getting kind of thin. Yep, stock can keep going higher. And that's not uncommon. And that's why with a lot of these oscillators in persistently bullish conditions, for some traders, they'll tilt the weight of importance more toward the oversold, which is comparatively less common than to the overbought. The overbought can just last for a long time. It can generate false signals. It'll tend to create more whipsaw exits potentially. Anyway, but here's our oversold condition. Isaiah suggesting there might be some other. I'm going to be going through some other stocks today. Isaiah, yeah. So that's good that you're out there maybe looking on your paper money to see what other stocks look like right now. But really, when we see that stochastic distance oscillator reaching down below 40, it doesn't do this very often. And so for some traders, they might go, wait a second, prices have really come down in recent times. And you can see that leading into these. Look how far down that stock moved. The oscillator is saying this isn't really normal. This isn't just a little bit of breathing, a little bit of profit taking. The stock has really come down against what was the prevailing trend of the stock, and maybe this is presenting a short-term entry opportunity. Now, as I say that, though, the NODAC, you always appreciate my explanations. I'm glad to hear that, because this one, anytime there's a comparatively simple one, I'm kind of excited, because this is going to be a piece of cake to describe how it works and how it's interpreted. For others, though, that are really layers of algorithms that go into the construction of these, I kind of have to give it some real thought. How am I going to try to explain this to an audience that's never seen this thing before? All right. Now, I want to bring in a new indicator to this discussion because this is not an indicator that's usually used. It wasn't constructed by Vitaly to be used all by itself. He stated in the publication, it was just last June when this was published, that this was intended to be used with a trend indicator. So we're going to talk about that in just a moment. But let me first of all say there is a survey that's just been added to the chat window. Barb has already reposted it. So for those of you that are here in the live stream right now, if you would do me the favor, click on that survey link right now. Now, Jay Chin is asking, how is this better than RSI, or can we just say any other oscillator out there? Better is a loaded term. Let me talk about that in just a second here. But regarding the survey, if you've never filled out one of our surveys before, they're really straightforward. 2 multiple choice questions. Then there's the opportunity to fill in a comments box and a suggestion box if you want to. I will just say that if you take the time to fill out my survey, I always take the time to read through those survey comments, to read through the survey data, see what buttons were clicked, and it just helps me prepare for the next webcast. So it's always appreciated. Thanks for doing that for me. But back to Jay Chin's question, how is this better than RSI? There is one thing that can determine on any individual trade which oscillator, which indicator, which combination of indicators is better or worse. What is that? It's what the stock does after that. So no indicator carries a guarantee of performance. All that I can do in these webcasts, talk about how they're built, talk about how they're typically employed, and then it's up to the trader to sort of experiment with for themselves which of these tools seems to be maybe most appropriate for the stocks they prefer to trade, which tools make the most sense to them, which are most intuitive. And then as the trader gets more confidence, maybe they can even make some refinements, some customizations to the tool, which we are going to be doing today. So let's add our trend indicator, because if the creator of the indicator says, hey, this one isn't intended to be used all by itself, well, let's go with that. I'm going to add a typical trend indicator. Now, if I say trend indicator, what's the first thing that pops into your mind? I'm talking to anybody who's been attending my webcast series for a period of time, or anybody that has a good familiarity level with trend indicators on charts. What's possibly the most common trend indicator? Because I'm just going to use that. Probably going to be a simple moving average. So let's choose simple moving average from our list of potential indicators. Let's add that to our chart. And by default, Thinkorswim goes to a pretty short time frame. And actually, the default time frame is probably too short to be terribly meaningful for use in combination with the indicator that we're talking about today. It only looks over 9 days. Let's extend that out, look at a longer term trend. An intermediate SMA, Paul, yeah, let's do that. Let's go out to maybe 100 days worth of data. The length of our moving average is going to be 100 days. Let's click on OK, click Apply, click OK again. I'll do a quick summary for those that aren't familiar with a simple moving average. This is a trend line that's generated in this way. Notice here over to the right, it says 170.84. That number specifically means that over the last 100 days, since I chose 100, over the last 100 days, the average closing price of Procter & Gamble has been $170.84. And that's plotted as a dot on the chart. And over time, that average price changes. Back in February, prices were lower. So the average price for the trailing 100 days was lower. So over time, that average that is generated simply by using the 50 period or the 100 period moving, the 100 last closing prices, it changes. So as that price changes and we plot those dots on the chart and we connect them all with a line, we get this moving average line. That's it. It's a simple moving average. And for some traders, that can be an indication of trend. For others, it might be levels of support and resistance, number of potential applications there. But we're going to be using it as a potential trend indicator. So how might you think about this? If average prices are gradually moving higher over time, despite the up and down nature of the stock from day to day, how might we say, or what might we say the trend is if average prices are just continuing to climb? They've been going up, down today, but average still going up overall. Yeah, for some, they might say that's an intact upward trend. And so if we have an upward trend here, down below, do you think we're looking for bullish signals or bearish signals if we're planning a stock trade? Probably for those traders who like to trade in the direction of the trend, they're probably looking for bullish behaviors on the stock or on the indicator. Or in other words, for our stochastic distance oscillator, or SDO, to be dipping down below 40 and then using that to generate potential entry signals. Okay, Eleanor, it says bullish. Absolutely right. Yep. So what is a bullish entry signal? Is the mere fact that we've slipped below 40, is the mere fact that we've traveled an unusually large distance downward as our stochastic is oscillating downward. Does that mean it's time to buy? Or do we pump the brakes and say, ooh, it's looking like it's almost time to buy? Yeah, there are a couple of potential timing techniques for entry here. The first is a little bit more aggressive. It's the earlier of the two entry signals, and that is to just watch the SDO line. If it slips down below 40, the moment it does a little uptick. So I might have to zoom in here so we can see this a little bit more detail. So here we are, we're heading down and down and down and down. And then you see that uptick right there? Right there as we're moving from the 7th of November. Actually, it was from the 6th of November to the 7th of November. That, for some, would be seen as an entry signal. That would be literally right here. Right? So we have an upward trending stock. Our oscillator has shown a distance traveled over the last 12 days that's unusually large, down below 40. And now it's starting an uptick again. We're getting a white candle here. Notice the position of the candle relative to the moving average. In this case, the trader might need to be comfortable buying stock when the price is below the trend line or the moving average. But yeah, that's a typical entry. Now there's a second typical entry, and that is, this one's a little bit more conservative. It waits for the stock to move a little bit more upward, waits for the oscillator to rise a little bit more, and that is for the oscillator to move back up above 40, minus 40. So that looks like that happened here on the 11th. And you can see, there we go. Happened about right there. That came a couple of days later. So what the trader is hoping for here potentially is maybe a little bit later signal, but maybe a little stronger confirmation that the bulls have returned to buying, that the distance from 12 days ago is a little bit less. We're a little bit less of an extreme, and maybe the momentum has shifted. Because if we buy, just because we've slipped below zero, even if we got a little uptick, that doesn't mean the momentum can't continue going downward. There can be more selling. Now, even in this case, if we've waited for it to go back up above minus 40, it's possible. Stock could just crash right on down again. But there's our entry signal. Is everybody clear on the two potential entries? Just the slightest uptick in the indicator, a little bit more aggressive, waiting for the crossover of the minus 40, a little bit more conservative, but does tend to come later. It doesn't just tend to come, it almost always comes a little bit later at a little bit higher prices. So, okay. Greg says, can you demonstrate incorporating this into a scan? Greg, I really doubt that this would already be incorporated in the scan capabilities. And right now I'm using the simulated trading platform. I'm on Paper Money. The study filters are not available on the Paper Money platform. And Eleanor just asked a good question. Eleanor, I was trying to avoid that question. No, I wasn't. No, the minus 40 and the plus 40, are they percentages? Are they dollar amounts? Where does it come from? It's generated by the algorithm as extremes. That's about the best I can do for now to summarize that, because I don't want to go into the particulars of the algorithm. I'd have to explain every little permutation of the calculation, and it would be too much. It's going to have to suffice for now to say below 40 is oversold, above 40 is overbought. Is that okay? I know that's a half answer, but it's the best answer I can provide at this moment. Anyway, so let's get into when might the trader take profits if they really manifest themselves, because any signal from any indicator is not a guarantee the stock is going in the hoped for direction. Algorithm is a great explanation. You'll take that. Good. All right. Because that's what you're getting from me today. But the first potential exit is actually, since it's distance traveled down that is built into this equation, this almost always, these big departures downward, let's just draw these in so you can see what I'm talking about. You'll see this signal here was preceded by a big move down in stock price. This signal here was preceded by a big move down in stock price. They are disproportionately large. That was enough to push the indicator down into the oversold range. This one here, big move down. Let's see, where did this one finish? Right about there. So what some traders will do is they'll just say, well, okay, if I'm getting in after this big move down and we can just get back up to that previous high, maybe that's where I'm going to take my profits. So that's one common exit. Rams, thank you. I really appreciate that. That's, let's say, a first potential target for planning to take profits. If the stock is able to rally on the shift in momentum and price as measured by our oscillator, well, we might take profits right back up there. Now, another way, and some of you may have already sort of sussed this out, is, well, if this oscillates down to lows representing oversold areas, up to highs representing potential overbought areas, what if I just waited for my oscillator to rally up above 40 and then turn again? That's a second potential exit. Now, in this case, that worked pretty nicely, didn't it? So the stock hit a low, but not the stock, but the oscillator hit a low. The oscillator rallied up to a high, and then just as it started to turn, maybe our trader was looking to exit somewhere. Let me get rid of this one. Let me remove this drawing. Let's see. Let's just remove that one drawing. And it might have been signaling to exit. Yeah, right about there. That's a nice trade. Does it always work? Not always. Nope. As a matter of fact, neither does the first one. In any case, look at this signal. You got a signal, and it's kind of hard to spot this one. I'm going to need you to look over here for just a moment. You see my cursor over to the left? It's in the upper left corner of the stochastic distance oscillator's display window. That number in red moves as I move around because it's showing me the SDO value at all times. So if I come back here, you can see that on November 7th, the SDO was minus 35. It's not oversold. On that's October. October 7th and October 8th, it was oversold, minus 40.20. And then we went to minus 39.97, crept back up above minus 40. So whether we were looking for an uptick or we were looking to get above minus 40, October 9th accomplished both of those. So there's an entry here. And if we were waiting to get back up to the previous high, we didn't get there. Nope, didn't get there. Not until over here. And that trade may have been over by then. Also, if we were waiting to get back up above 40 on our oscillator, didn't get there either. So there's an example of how it looked like a nice signal, didn't pan out in either case. So there we go. There are potential entries. There are potential exits. I did want to talk about maybe even customizing the indicator. I promised you that there are scenarios where a trader, if they're comfortable enough with the indicator and they feel like customizing, this is one of the indicators that can actually be very extensively customized. I'm not going to extensively customize that. It would be beyond the scope of a getting started with technical analysis discussion. Paul says, oh, what about, is it extreme to the zero line? Well, that's a good question, Paul. There actually is some weight given to that zero line. What the zero line means is there's basically been no change over the last 12 days on a weighted basis because there is that 6-period smoothing element here. But yeah, basic way to think about this is that if we're at the zero line, not a huge change from 12 days ago on average. But what traders will commonly do is that if our oscillator is slipped down below zero and then it rises up above, so let me show you an example here. Right there. See how we were below zero and we're starting to rise back up above. They might just see that as a confirmation that our trend overall is still intact. That's it. Isaiah says, is this a short-term indicator? Yes, Isaiah. In most cases, when we're dealing with oscillators of any type, RSI, CCI, stochastic, MACD, they are they're typically used to measure short-term or look for short-term highs and lows. Now, does that mean they can't be used in the planning and execution of a longer-term trade? No, actually, that's quite common. Let's say that we have a longer-term investor who's planning to buy this thing for maybe the next year, but they still say, well, heck, if I can get it at a low price in the short term, might as well. Could they still use this oscillator to possibly look to get in at lower prices, trying to buy it, let's say 165 rather than 175 or 180? Could that still be valuable on a long-term ongoing basis? Could be. Yep. Is everybody going to use this oscillator? Nope. There are way too many indicators out there for everybody to just focus on one. Yeah, for those that do use technical analysis and charting in the planning and placing of their trades, there's a wealth of different tools to be selected from. So my job is to just introduce the tools and say, here's how they work, and go use the ones you want to use if you were going to use them at all. All right, so let's talk about customizing. Let me bring up another stock, AXP. Here's a stock that's had a nice upward trend, especially if we're measuring according to the trend of the 100 period moving average. That's a nice smooth upward moving average. And at times there have been signals generated by our oscillator. There was a signal here, bullish entry signal there. There was a bullish entry signal there. But at other times, there are some near misses. Look at these ones. Down close to 40, didn't get there. We got down close to 40, we didn't get there. We can actually, as we point at this, I can see that we got down to about a minus 29.77 at the absolute low. So we're getting to relatively distant extremes, just not quite as much as we saw in our other chart on PG. So that can lead to some frustration for traders because, boy, that would have been nice to be getting an entry signal here or to possibly getting an entry signal here. And it can also leave us waiting for long periods. There were only 2 signals generated in an entire 12-month period in a very solid upward trend. So for that reason, some traders might say, you know what, I would like more frequent signals. Possibly, here's the conceptual trade-off. It's not always the case. Let's dial up the number of signals, possibly dialing down the quality of the signal. But how do we speed up the signals, create more signals? Well, maybe if our oversold weren't so darn low and so hard to reach, it might generate more signals. So, for example, let's go up here to our Edit Studies icon. Let's go to our stochastic distance oscillator and click on the little Customize gear. And how about we say, you know what, to get to oversold, we don't have to get down there to minus 40. Maybe we only have to get down to minus 25. Let's click OK and click Apply on our chart here. Click OK again, and that does generate more signals. So this one turns into a signal. This one turns into a signal. But here's a trade-off where we were once waiting for it to get down below 40. For those that are waiting for it to get back up above our oversold line, they have to wait longer. Yep. So that might force the trader to wait several more days if they're waiting to get back up above our oversold line. Now, for those that just look for an uptick in the oscillator, it actually doesn't affect the speed of entry at all. Just allows them to get in just as soon as they were before. So these 2 signals will remain the same in that case, and then we'd get 2 more. Now, am I saying that we just improved the indicator? Nope, we just customized it. Whether it improved it or not is really up to what does the stock do after it's generated its most recent signal. If the trader has taken that trade, let's see where it goes from there. But yes, the possibility is there to customize. I want to point this out. Are there lots of other customizations we could have made? Could we say, hey, let's look at distances traveled over a shorter or a longer term time frame? Yes. Could we use a longer or shorter term comparison time frame? Yes. Could we change the overbought? Yes. Could we change the smoothing factor if we're really getting kind of fancy schmancy here? We could. I want to point out those can be changed. They can be customized if a trader really feels like they're comfortable with the implications of those changes. But for now, I'm just going to leave it at this. This one, I think, is a relatively straightforward adjustment. It just moved our lineup. There we go. All right, but let's look at one more chart. And how about we place a trade? Let's look at what's going on. Oh, you know what? Matter of fact, how about we set this back? I'm going to put this back to minus 40, the default levels. Click OK, click Apply, click OK again. And we're going to go on to WELL. And let's sort of walk through what we've just learned, apply this to our chart, and plan and place a trade. First question for our trader here is, what is the trend line telling us? Well, we have an intact upward sloping 100 period moving average, meaning to some technicians who use this as a trend indication, an intermediate to longer term trend still seems to be intact despite this pullback. And as a matter of fact, it may reframe this pullback as a potential short-term opportunity for our hypothetical trader here. Our pullback, interestingly, has taken us back down to our trend line. And at the same time, our oscillator has reached not only below our minus 25, not only below our minus 45, but it's gone down quite a bit below. It actually reached as low as what, minus 70. And now it's starting to uptick again. That little uptick may signal time for entry on this stock. So I'm going to say, let's buy the stock, trading around 130 bucks. Where might we take our profits? Well, in this case, since we don't know if or when it will get back up to, get back up above 40, and I can't put that into an order. Instead, let's just say, well, what if we get back up to this previous high? Looks like there's a pretty good resistance right up there around 140. So buying at 130-ish, let's put our resistance up there, 140, that'll be our target. So where might we plan to exit with our losses? Yes, these trades can go afoul. They can go wrong. A common exit here, since we're thinking momentum is shifting and starting to go up, price should go up. If instead it goes down, for some traders, they don't have a lot of patience. This is a short-term indicator. If we slip back down below recent lows, it might be time to take losses. Recent lows are pretty snug here. Let's zoom in on our trade. So we might look back over the last several days, and following this pull back, how low did we get? Well, the lowest day actually was today. Today's low was 127.72. As I pointed this, look up in the upper left, and you can see the L is 127.72. Let's say our trader is going to give it, maybe a percentage point or two below that. Let's go maybe 2% for this example. That might be about $2.50 below today's low. Is that going to be in a good spot? Let's see. That would put us around 125-ish. So if we have a stop down here at 125, that's 2% below recent lows. Well, we'd be taking about a $5 risk, assuming a fill at about 130 bucks, in pursuit of about a $10 reward. For those that like to look for a 2-to-1 reward to risk, that about fits the bill there. Let's do that. Let's go ahead and place our trade. Let's go to our trade tab. WELL is our trade for the day. I'm going to right-click on the ask price here, and let's put in a custom buy order with an OCO bracket. So this is a $130 stock. 100 shares can be about $13,000 trade. This is a $300,000 account. That's not a huge portion of that $300,000 account. What about 4%? Let's leave that right there. 100 shares. I'm actually going to put this in as a market order. And then our limit orders, where we intend to take our profits, let's set that at our 140 recent resistance, recent high. And then our stop is going to be just down below recent lows at 125. We'll make those both good till canceled sell orders. So let's click confirm and send to place this trade. Buying 100 shares of well at the market. With market orders, prices can change quickly in fast market conditions, resulting in execution prices that can be different from the quotes displayed at order entry. So we're not guaranteed to fill it around 130 bucks. With stop orders, there's no guarantee the execution price, the price received, will be equal to or even near the activation price or the trigger price. So we're going to put in an order to sell if we can get up above 140, see if we can get there. We're going to put in an order to sell if we get down to 125. That'll be our trigger or our activation price, and we'll see if we get out at that level. Paul, it's a good question. I don't discuss options in this webcast series typically, and there wouldn't be time to really do your question justice anyway. So I want to let you know that at least I saw it. In any case, I'm going to send this order off. There's not a commission on these trades, but there can be on other types of trades. But let's click send. And we have done it. That's an introduction to the stochastic distance oscillator, brand new indicator on Thinkorswim. Really brand new to the world of technical analysis. It's only really been available for about 18 months anywhere. So hope you enjoyed that discussion. Eleanor says, is 2% a good mark to observe on the stop placement, Eleanor? For some traders, it may be more, it might be less than that. And that might be governed to some extent by how much reward potential there is theoretically in the trade. If there's enough reward to maybe use a looser stop, some might do that. If it's kind of a modest reward, maybe they snug that stop up. Okay. Jay Chin says, can we place OCO orders with trailing stops? Yes, but I didn't do it in today's webcast. All right, everybody. We've given you an introduction to the construction of the stochastic distance oscillator. We've talked about the potential application of the indicator, and we've even placed a trade. Built it with this brand new tool. I think that's pretty fun. If you want to experiment with this on your own, you can just go to your Paper Money account after today's webcast, build a trade, see how it works. Start to experiment with new tools. It's always fun to learn something new. All right, but it's time for me to let you go. As you do, remember, things are changing. Yes, we have a new lineup coming up starting in 2025. This is actually going to be the very last time I teach this webcast, at least on an ongoing basis. I'll certainly look for opportunities to do it on a fill-in basis. But yeah, this webcast series, I'm turning the reins over to Barb in 2025. I'm going to be taking over for her in getting started with options in 2025. So go to schwab.com/coaching/webcasts, and you can just move it forward to January of 2025 and look at how the week is going to be laid out then. So check on your favorite instructors, look for your favorite series, look for new series, because there's some new stuff coming. Should be fun. Also, make sure, if you haven't done it already, that you're subscribed to our Trader Talks channel, because this is where we take the previous webcasts and we archive them into playlists. So you can just go down right below the display window right now, click on subscribe. It only takes a second. It doesn't cost anything. Subscribe to the channel, and you can find the playlist right here. You can also join the live streams right there, and you can even do searches for topics of interest. So if you have an interest in learning about stochastics, there's a discussion of the more traditional stochastic oscillators. Now, finally, make sure that you're following Barb and me on X. You can find Barb there at Barb Armstrong CS. You can find me at Cameron May CS. It is the very best place to connect with your favorite presenters in between the live streams. Thank you to everybody that's already click the like button. 52 people already clicked the like button out of 120 that are watching the live stream right now. That's awesome. That sounds like applause to me. It also boosts my webcast in the YouTube algorithm, so more people can learn about this new indicator. So that's always appreciated. And thank you for those that have already filled out the survey, or if you haven't done it already, click on that survey link right now. You can fill it out just as I close my comments. Everybody, thanks for giving me your time today. Go enjoy the rest of our webcasts. I'll see you in a future webcast series. I'll also look for you on X, but whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.